Welcome to The Explainer. Today, we're going to dig into a really contrarian idea about investing. An idea that says, hey, all that advice you've been hearing for years about stocks and real estate, it might be completely wrong for the massive financial shift that's heading our way. So let's just dive right in. This question is really at the core of everything for anyone trying to save money. You work your tail off, you put money aside, but is it actually safe? Are you really protecting its future value? And this is what's known as the investor's paradox. It's a real catch-22. On one side, you've got your so-called safe stuff, right? Like fixed deposits. The return is guaranteed, sure, but once you factor in taxes and then inflation, you're actually losing money. Your purchasing power is literally shrinking every single year. So on the other side, you think, okay, I'll go for growth. You jump into stocks. The problem, predicting what they'll do tomorrow or next week is a total crapshoot. It's not investing, it's just gambling. So if the safe road leads to you being core and the growth road is just a casino, what are you supposed to do? Well, the material we're breaking down today says the first step is to just stop and question everything we've been told about investing. And that leads to this quote, which is pretty bold, right? The conventional wisdom, what everyone tells you, is that if you want real long-term growth, you have to be in the stock market, period. But when you actually pull back and look at the numbers, especially over the last couple of decades, a very, very different story starts to take shape. Okay, now look at this. This is where it gets really interesting. Let's take the Sensex, a major stock market index, as our example. From 2000 to now, it's grown about 17 times over. And hey, that's not bad at all, right? That's an impressive run. But in that exact same time frame, both gold and silver grew by 40 times. Not 14, 40. 40. That just completely shatters the myth that stocks are the undisputed king of returns. Okay, so if stocks aren't the magic bullet, what about that other huge pillar of wealth building, real estate? Well, according to this source, we are in a massive, massive bubble. Prices are just so ridiculously inflated, so far beyond what normal people can afford, that the risks are just off the charts. Think about it. You could get trapped with a giant loan on a house that's actually going down in value. Or even worse, the builder just goes bust and suddenly you're left with no home, a huge loan you still have to pay, and you're still paying rent. What a nightmare. So if the two main roads everyone tells you to take, stocks and real estate, are full of potholes, it kind of suggests there's a bigger earthquake happening underneath, right? So let's zoom out. Let's forget about individual assets for a minute and look at the huge financial shift happening across the entire globe. Now, this brings us to a fascinating historical theory called the fourth turning. The basic idea is that history isn't random. It moves in these big, predictable cycles, roughly 80 to 100 years long. And right now, we are supposedly in the final phase of a cycle, the crisis phase. This is the part where the old system, the old order, starts to fall apart to make room for whatever comes next. You can think of it as the end of the entire financial system that was set up after World War II. And according to this theory, that whole thing is about to break. And look, this isn't just some dusty old theory from a book. You can see the warning signs flashing everywhere if you know where to look. For decades, the safest place in the world to put your money was U.S. government debt. It was the bedrock of the system. But now, central banks all over the world are dumping those bonds. And what are they buying instead? Physical gold. By the ton. That is a massive flashing red light that countries are getting ready for a future where the US dollar isn't the center of the universe anymore. So that begs the million-dollar question, or maybe the trillion-dollar question. If the whole system is shaky and the safe things aren't safe anymore, where does all that money run to for shelter? And historically, the answer has always been the same. This source gives a really powerful analogy for it. Don't think of gold as an investment you buy to get rich quick. Think of it as the ultimate insurance policy. It's the financial equivalent of turning to a higher power when all the doctors have said there's nothing more they can do. It's what you run to in stocks, bonds, real estate, even the money in your bank account when all of it fails. Okay, I know what you're thinking. Wait a minute, isn't gold already at its peak? Haven't I already missed the boat on this one? And that's a totally fair question. But this is exactly where things get, well, weird and completely unprecedented. Check this out, because this is the key. Historically, gold rallies after the stock market crashes, right? The market crashes, people panic, they sell stocks, and they pour money into gold for safety. But look at what's happening right now. The stock market is at an all-time high, and gold is also at an all-time high at the same time. This has never, ever happened before. What that suggests is that the real panic, the real flight to safety by the public, hasn't even started yet. The big players, the central banks, are just getting in ahead of the crowd. Okay, so that's gold. Now let's pivot to silver. Because if you think the gold story is compelling, the silver story is where things get really explosive. You see, if gold is financial insurance, silver plays two roles at once, which makes its situation absolutely unique. All right, so at first glance, you'd think there's just tons of silver everywhere. I mean, way more silver has been pulled out of the ground in all of history than gold. But here's the giant plot twist. Gold is a hoarder's metal. Almost every ounce ever mined is still with us, sitting in a vault or in someone's jewelry box. Silver is different. It's a workhorse. It's the best electrical conductor, so it gets used up in everything from your phone to a solar panel. It's consumed by industry, often in such tiny amounts that it's just gone forever. Poof. And that one simple fact leads to this absolutely mind-blowing reversal. When you look at what's actually available for someone to invest in, bars and coins, there is now 3 times less silver than gold on planet Earth. Let that sink in. The common perception is that silver is common and gold is rare. The physical reality for investors is the exact opposite. So let's talk about size, because this is where it gets really crazy. The total market for investable gold is massive. We're talking something like $17.5 trillion. It's a huge ocean. It can handle trillions of dollars flooding into it during a panic. Now, let's look at silver. The entire market for investable silver is only about $80 billion. No, that's not a typo. Billion with a B. That is so tiny, it's hard to even comprehend. It's less than half of 1% of the gold market. Gold is an ocean, silver is a backyard swimming pool. And this is the whole point. This is the collision course. You have 3 gigantic forces all barreling towards this tiny, tiny pond. Force number 1, all the industries of the future. AI, data centers, solar panels, electric vehicles, defense tech, they all absolutely require silver. There is no substitute. Force number 2, governments. The US has officially declared silver a critical mineral, meaning it's essential for national security and the economy. Other countries are doing the same. And force number 3, all the investors who might suddenly decide they need a safe haven. All 3, trillion-dollar industries, world governments, and millions of investors are about to start fighting over a tiny $80 billion sliver of a market. What do you think happens then? So what all of this points to is something much bigger than just an investment tip. It really forces you to take a step back and ask a really fundamental question. What even is money? And the source material here makes a pretty provocative argument. It says that all these government currencies we use, dollars, euros, rupees, whatever, they're basically a giant Ponzi scheme. They're not a real store of your wealth or your work. Their value is mathematically guaranteed to go down over time because governments will always, always print more. You're holding an IOU, an illusion of money, not the real thing. Okay, so let's wrap this up with the key takeaways. What should you get from all this? Number 1, the old playbook, the one that said just buy stocks and real estate, is getting seriously outdated. Number 2, preserving your wealth in the long run might mean thinking less about paper promises and more about real, hard assets that have proven their worth for thousands of years. And finally, that incredible setup in the silver market. You have this massive, critical demand about to slam into a tiny, tiny supply. That is a truly unique situation. Again, this isn't specific advice, but it's a whole new framework for thinking about the future. Ultimately, this whole idea isn't about trying to time the market or get rich next week. It's about a much deeper shift in how you see the world. It's about shifting your mindset from speculating on paper assets to owning things with real, tangible, lasting value. So the final question is simply this: are you prepared for that future?